Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 30th of January, 2019, 2020. Um, this is episode number 1682. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is definitely in a risk-off pose posture. The S&Ps are trading lower. Crude is also off $1.22. Crude is down 2.29%, um, with gold and the British pound leading. Also, the U.S. Treasury bond is up 11 ticks from settlement yesterday in the futures. Again, clearly risk off. Looks like we are likely to retest this naked point of control in the ES down at 32.44-ish, 45-ish. To me, it seems like the market's actually starting to balance out after selling off and then rallying. Yesterday did not bring the kind of action that was expected. So, with the FOMC behind us, we're looking ahead at what's next. The calendar shows that the Eurozone business confidence came in worse at negative 0.23 versus negative 0.18. The BOE left the interest rate unchanged at 75 basis points. The US GDP came out about a half hour ago, Q on Q, and it came in at 2.1% in line. GDP price index came in at 1.5 versus 2%. Initial claims came in at 216,000 in line. So that's what we have for today. We still have GfK consumer confidence this evening for the UK, for Great Britain at 7:01 p.m. and NBS manufacturing PMI for China at 8 p.m. expecting 50 on the NBS figure. So that's where we stand. Let's take a look at what was expected yesterday versus what we got. Here's the view. The expectation yesterday, given the way the posture we had on Tuesday. Sorry. Given the posture on Tuesday, I expected a dip down as we move in, again, moving into the balance area up above that comprises the all-time high. The expectation is to push down and then squeeze higher into the FOMC. The alternative is what kind of happened. We did not push up high enough for scenario 2 to be feasible as far as executing. We did push higher though. Versus what was expected. We did push higher on the open. The open during the trader bout was expected to be right on the top of the range. We ended up pushing 6 points higher before the cash open, and so what was expected to be an open down here and a push up here for failure down for scenario 2 ended up opening higher again at 90, pushing up to 91 and selling off. So we didn't have an opportunity to really assess or measure out the quality of the push higher. So the short can be put on. The short was targeting the point of control around 32.77 yesterday. So overall, the market dropped back into the range, went right to value low. Remember the day before it went to 52, which was the value high test. It went to value low. It did try to bounce off a value high, the black line up here. And when it failed, it pushed through. It bounced off the point of control, and then it continued to value low, consolidated, and came all the way back. Once the mid failed, it's hands off the shorts. It either is likely to go to balance, go to bounce or rally higher. And what it did is it rallied higher, broke the IB high finally late in the day. We broke the IB high at 1 o'clock Central, and then it just walked itself down from there after the FOMC. And we put in a neutral day. This is a normal neutral, neutral normal day with a profile that's showing that discovery was active throughout the range. In other words, there was really no consensus reached yesterday on what value is. So, with that being said, given that the auction did not really take a bounce back towards the center, the middle of the range, it seemed incomplete to me. So the expectation for the overnight was for it to continue. We opened, pushed lower, and then attempted to squeeze higher, went right back to that 77 area, the close and point of control, and then came right off. And we've been trending down through the Asian session, and a nice little to the tick test of the mid there. The blue line is the mid, but the continuation never came. We've been consolidating here, and it seems like it's finding a base. The profile overnight shows long liquidation potentially, a market that has moved, opened up higher and moved to the lower end of the range and is balancing at the lower end of the range. So to me, this looks like a long liquidation profile. It's likely to continue lower. This is what the order flow looks like overnight. Pretty bouncy up and down kind of trade. We do have some liquidity at 32.63 and a half. It's been sitting there a bit, and then and then above there 32.71, which is the prior close. Notice that there's more liquidity kind of showing up down below, as I've been telling you, kind of an insider's view, something that was shared with me a long time ago by a floor trader. But as you can see, the liquidity is a little bit heavier down below. We do have some up above, and it's been shifting down. And again, as I said, it's consolidating. But to me, the move down is incomplete, is likely to be incomplete. It doesn't look like it has really found its buyers yet. I'm expecting that it's likely to test into these areas, potentially push to 32.26 or so. And it's currently trading. It's currently trading at 32.52. The 26, of course, not expected today, but overall, it just seems like the market is not able to find traction from the buyers like it did a couple of days ago. So that's where we stand in terms of the order flow. Let's take a look at the bigger picture. 1 second. What have we done in the bigger picture? This is the composite chart. These are daily bars based on the day session only. The market has gapped down, put in a nice little hammer looking bar here, and then started walking back, started to walk back up, and has found resistance and has rotated down. To me, this looks like a push, pull, and potential continuation. 32.33 was the low the other day, and it looks to me like it's likely to base here. Today, there really isn't much on deck that is expected to move the market. Today, really, we need to be cognizant of the fact that we are really right in the middle of these three bars. We're trading right in the balance, the short-term balance of those three bars. I would lower my expectations for today in terms of what it's likely to produce. The volume overnight is pretty heavy. Expect a pretty aggressive price discovery in earlier in the session, but to me, it's most likely going to be a choppy session today. So just make sure that you're not placing huge expectations for a trend day or anything like that. I think that's a low probability. Again, neutral yesterday afternoon became neutral down. We're trading down here. The expectation for today is an open auction that responds back up into the 3260 area, likely to confront some resistance, roll over, push into 3245, 44, take out the overnight low. Much more probable that we take out the overnight low than the high, and then test that 33 area for a potential test at 26 down below before the bounce. So I'll be conservative at 33 down here, 32, 33, but the expectation is it's likely to go to 26 down below. That's scenario one. Scenario one is essentially initiative down as we continue the move, the gap down move that we had from last Friday. So I'm considering this pull up into 90, 93, 94. I'm considering this a pullback for continuation. However, the market hasn't performed very well selling, with the selling continuation. It's really done it's done a lot of kind of pushing down, and then it comes in and buys right up like we saw 2 days ago. The secondary scenario is an open that pushes down into the 44 area, completes the overnight, and then immediately becomes impulsive up, pushes back up into the close, and then starts to walk itself back towards the 69.70 area. Now again, I'm outlining the key areas here. Okay, so pay attention to that more than the pattern that the market is likely to take. I'm outlining the key areas as to where it may see a reaction. That's what's important. It may end up doing either one of these, but it may do it in a different way. Consolidate all morning and then blast off higher or lower into the next key areas, the key targets that I'm outlining here. So don't get too caught up on how the market does this. Just understand that if it does, this is how we respond to it. Okay? Anyway, good luck today, and I'll catch you tomorrow morning. Take care.